excitement of getting the deal that can help you see through that. I think that's brilliant. I think that's a really smart approach there.
Yeah.
Um,
Well, just one thing, sorry.
yeah,
Just the
please.
property managers are fantastic. That was a great thing. But I think the best part there is them checking rents
Hmm.
and then your numbers on renovations. That's like the main thing you get from the property manager, right? Obviously the neighborhood too and stuff like this and make sure but I think like figuring out making sure are my rents accurate of where they're going with we do this. And then also is this renovation budget. And those two things are like huge things that is very, very difficult. Well, rents are easier to calculate, but renovation costs can be very difficult per project. You know what I mean?
Oh
And
yeah, absolutely. And it's
yeah.
moved a lot over the last 3 years,
Hmm.
and it's Welcome to the Stephen Lee Thomas Show, where we provide expert advice for real estate entrepreneurs. And I'm your host, Stephen Lee Thomas. And it wasn't that long ago that I was navigating the challenges of real estate investing, learning from my mistakes, and building the business I have today. I created this show to give you simple, actionable, step-by-step strategies to help you do the same. Each week, we bring you in-depth discussions with industry leaders and professionals who share their knowledge and practical tips. So sit back, take notes, and let's dive into today's episode. Hey, welcome back to the show. Today, we're going to cover part 2 of last week's episode. So if you haven't already listened to part 1, I highly recommend you go back and check that out now. So with that, let's jump into part 2. Because in my experience, you can spend all your day underwriting deals, or you can spend all of your day raising capital. And then as you start to spread yourself too thin in both of those, you're not 100% on either one. I totally agree with you. Like, everybody always needs to be raising capital. You don't have to raise tons of capital, but you always need to be having that conversation with the ability there. And then on the flip side, if all you're doing is looking at raising capital, how how can you be certain that the deal that you're going to raise capital for is a good deal if you don't know how to underwrite a deal? If you can't
Right.
look at a deal and vet the deal yourself, how do you know it's a good deal? Like, you might be losing
Yeah.
people's money on that. So I totally agree with you. You've got to have that the overlap in there. Um, in your experience, how does someone? I mean, we're like, a few steps into this. How does someone even learn that that's their value as they're getting a mentor? They're starting to. I need to go find the right partners, but you're new to this. What's your advice for someone to kind of figure out where your niche is in this space?
Figure out what you're good at and figure out what you like doing. And I think those two things, it's like kind of with anything, you know what I mean? Stuff that you usually kind of like or stuff that you're probably better at. And I guess not golf, you know what I mean? That's kind of everybody's thing, right? But the thing though is that it's something that like I review underwriting, and when I coach people on buying property, and we'll go through different scenarios of what it is. I wouldn't consider myself an underwriter, right? So I have an assistant that really double checks all of our stuff that we work with. We have an in-house and out-house of assistant that we work with. And so we pass deals through both of them, and really kind of seeing that exactly what they're bringing up. Because if we're partnering with someone and they send us a deal and like, hey, do you want to partner on this deal? Someone that we've worked with before, and we'll send it through and kind of review exactly what it is, from the location to the numbers on it quickly, and then a little bit more in depth if it's something that we're actually interested in moving forward with. Usually from the beginning, you'll know within 10 or 15 minutes, maybe less, that if you want to look at it after you're looking at it, oh, this is too old, this isn't the right neighborhood, this property is, it's a very heavy value add, whatever it might be that you don't want to deal with. And then you can go back to your partner and say, hey, we're not going to move forward on this, but thank you for the opportunity. And I think the thing is that being able to have two different eyes,
Mhm.
especially if you're not that underwriter, to review, and kind of having someone that's in-house and having someone that's outside, you know what I mean? Having a contractor that's outside reviewing it gives you different ideas of what the problems are. Because a person that's just getting paid per deal outside that has no financial upside will um have different feedback for you, because they might not be trying to push the deal through, right? Versus
Yeah.
someone so that's what I found. And getting like a report on it, and I'd be like, you send to someone, you're like, hey, just spend 3 or 4 hours on this. This is something that we're really seriously committing. And usually what happens is that deal isn't like completely shut down. It's just that it's really, these are the things that you have to look at, right? So this payroll is too low. You should add like, $200 a unit per year to this pay or whatever it might be. This insurance is too low, or they're only saying that's going to go up this much per year, and that's incorrect. And then you have to put it back into it with those new assumptions, and then you make your decision on what you're doing. And I find that different from someone that's like, oh yeah, property is great, this is great, everything is great, and that's kind of the talking you get as you're getting to like the top of the market. But it's something that, we've heard that before, and I've heard people send it to me. And then I've looked back on deals that we've turned down, and I've seen that they go into foreclosure, and you're like, hey, so you like stick to exactly kind of what it is. And I have a couple of those deal examples, and I share them with people I train with, and I kind of go through exactly the errors that I found in this. And
Hmm.
I'm
Hmm.
myself, like you said before, the diagram, I mean, there's some overlap there of stuff I can see, and I'm like, this just won't pencil. You know what I mean? Like this is any way you do it, it's just not going to work out correctly, or it's too thin of a deal. You know what I mean? And it's like that's where the risk happens. When you get too thin, you're trying to really push something through. And sometimes it's difficult if everybody is kind of on the same team, whereas you just like send to someone, they're like, listen, this is terrible. I don't know what you guys are doing, but but you know what I mean?
Hmm. Yeah, and I love the perspective of an outside set of eyes. I honestly never thought of that. I mean, I have a property management company, always review it.
That's very
But I
good.
don't, that's a good one, but I don't know that it's as uh what's what I'm looking for, not subjective. I think that they want the deal too. I mean, they'd like you to get the deal as well. They'd probably like to add it to their portfolio, but to have someone who really doesn't have a whole lot of skin in the game, look at it pragmatically, and that doesn't have the emotional excitement of getting the deal, that can help you see through that. I think that's brilliant. I think that's a really smart approach there.
Yeah.
um
Well, just one thing, sorry.
yeah,
Just the
please.
property managers are fantastic. That was a great thing. But I think the best part there is them checking rents,
Hmm.
and then your numbers on renovations. That's like the main thing you get from the property manager, right? Obviously the neighborhood too and stuff like this, and make sure but I think like figuring out, making sure are my rents accurate of where they're going with we do this. And then also is this renovation budget. And those two things are like huge things that is very, very difficult. Well, rents are easier to calculate, but renovation costs can be very difficult per project. You know what I mean?
Oh
And
yeah, absolutely. And it's
yeah.
moved a lot over the last 3 years,
Hmm.
and it's market dependent. And then you may be underwriting one way and say, "Oh, I'm going to renovate it this way," and then the property management company may say, "Don't do that. Do this instead." I think they'll
Right.
have a different perspective there. Um,
Yes. And then paying them to do that and walk the property with you, no matter what other inspectors you have, is worth it. I mean, we one time bought a property, our first syndication property. I remember we paid like $2,500 or something for two of the people from property management to walk with us,
mhm,
and
mhm.
they scored every unit themselves. They knew exactly the work that had to be done with it. And that was, I've never, there's no money you've ever spent for due diligence. You're like, you know what? That was a waste. You know what I mean? It's always like, I wish I'd spent more money doing due diligence, right?
Yeah, 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 absolutely. Because you always find something after you close. There's
Yeah.
always something you're like, "Ugh, I didn't see that one coming." I get asked this question a lot, and I'd like you to share your answer. Underwrite. You mentioned a few things about underwriting, and reading between the lines. You don't take every deal and underwrite it completely. What you
Mhm.
said was you can look at some deals, you can be 10 to 15 minutes. You're through that, and you know that it doesn't. It's not going to work for you for a number of various reasons. Getting a property management company to get involved in your underwriting, you're probably not going to do that up front
Mhm.
because they spend a lot of time. They're going to go drive the property. They're going to go do a market survey. They're going to, check the rent in the area. They will want to visit the property with you when you do the property tour. At what point in your stages of underwriting would you actually consider bringing in a property management company?
I think when you're getting to the point of, you've got maybe an accepted LOI, or if you're when your first property letter of intent, or if you're, um, because once you have the LOI, I mean, it's not legally binding. So in most situations, right? I imagine there's some LOIs that might be, but just the whole goal of it is not to be legally binding. So it's really just kind of tying up the property while your attorney's putting together a purchase and sale agreement. But at that point, when you're putting out LOIs and you're having accepted one back, that's when kind of bringing in that property manager. You should be doing your full underwriting beforehand. But at that point, that's like going to the next stage. That's like when you're probably talking to, this is when you're talking to investors. This is when you are putting together inspectors and due diligence people and kind of like who's going to come out and review it. But before that, before them even getting into it, you can just send over and tell them, hey, this is the property, this is the vintage, these are this is the address. And they probably can spend a half hour or 45 minutes. And even if they bill you for that to review it on, really high level, before you put out the LOI, you know what I mean? They can do that too. And that's gonna inform you better. If this is your area that you're buying in, every deal or every professional you speak to in that area is just going to increase your knowledge, which makes you a stronger buyer, which moves you up the list in the sense of being able to put in more accurate bids on the properties, right? Offers on property. So, but a full one when they're actually coming out and they're doing a whole thing, that's gonna be something that, hey, we're gonna pay you how much it would cost to walk these units with us and to look at it, and this is our business plan. That would be something I would have them do probably on the same day as I'm doing inspections.
Yeah, awesome. I appreciate that perspective. And like I said, I get asked that a lot. Hey, at what point do I bring in the property management company? Just like you, my advice is you don't need to bring them in right away.
Mhm.
I love the idea. Give them a heads up. Sometimes what they can do is they can provide some guidance
Yeah.
of what renovation cost might be when you're doing your budgeting for your capex expenses or the things that you plan on, the value add projects you do, even renovating units. So they can give you some preliminary guidance on that that would help you out. But I agree with you. Don't burden the property management company up front, or you'll drive them crazy. Because like you mentioned, you may underwrite 100 deals before you get one that really truly makes sense, and you may be submitting offers along the way, but there's a lot of work to it, and
Yeah.
you will have property management companies say no thank you, I'm not going to do this anymore for you up front. So
Yeah.
all right, so on this journey of I want to get into my first multifamily deal, I'm going to recap here, help me out. um we had mentioned find a mentor, but I think there's even a step before that. You can make a decision. Do you want to passive invest or do you want to be an active investor? Because you can invest either way as a passive
Mhm.
investor or a general partner. One requires a lot more work. You can balance it with your family and your day job. Um, but you need to understand there's some work there, or you could potentially be a passive investor. So then
Mhm.
the next piece of advice I heard you say was you need to, and we mentioned getting a mentor. You don't have to get a mentor, but it sure is going to help things out. And there's different groups that can do this, or there's individuals that can do this. So then you're going to get a mentor and you're going to start learning the different aspects of this. From there, you need to start finding the right partners and understanding your value in that process and how you can add value. Because there's a lot of people who are out there, and you kind of have to poke your elbows out a little bit and work your way in, and there's other people trying to do the same thing. So what I heard you saying was understand where you can add value. There's a few different ways you can do that, but take the time to really understand where you can add value. And from that point, it's like doing the work, showing up and
Yeah.
doing the work, showing up and doing the work. Then after that, we talked about a few things, but then after that would be start getting out and looking at properties and submitting offers.
Yeah, for sure. Yeah, once you figure out exactly what you're doing, start going out there, and that's really narrowing down kind of type of properties you're buying, the size of them, and reviewing deals and seeing exactly what the market is, and yeah, and ultimately putting out offers. You know what I mean? And that's where you have to. That's where you're really doing it. You know what I mean? You're putting out offers there, and then really knowing what you're going to do after you have an offer that's accepted. Because at some point you will. So, do you have the money lined up for this? Where and this is kind of where that whole networking comes. If you can raise so much money for it, how many other partners am I going to need for assisting me with this? Maybe I don't have any asset management experience of working with property management companies. Um, that's something that I probably want to have someone on my team with, or maybe I'm looking for somebody, another analytical person I can partner with, or whatever it might be. So, knowing all this before you put all those offers, having the plan of what's going to happen, because then you get an approved offer back or, accepted offer back. And then you're like, well, What am I doing now? This is great, but now this is where I start really putting out money. You know what I mean? We're hiring attorneys, we're getting inspectors, due diligence. This is where, we're starting to talk to lenders and putting out fees to them, so it's a really important part of the process where you have to know what you're doing, what your game plan is afterwards. And I think having kind of all those boxes checked before you start, because the problem happens is that if you find a deal, even if it's good and you don't have your team put together, or you can't raise the money or whatever it might be, you're going to lose that deal, right? And you might even, ruin a relationship with that broker too, because they're putting their name on the line for you as that investor that, hey, this person can close it. I know them, they can do it. You know what I mean? Or I've met them before and they have strong financials and their name's on the line with everybody. You know what I mean? Because they want to make sure that, so you have to make sure that you're following through on what you're saying.
If you're enjoying the podcast and want to fast track your way to becoming a full-time real estate entrepreneur, then join the Multifamily Mastery Hub on School. You'll get access to our educational course library, live trainings, live interviews, and a community dedicated to helping you succeed. Visit school.com/multifamily mastery hub. That's SKOOL.com/multifamily mastery hub and fast track your way to becoming a full-time real estate entrepreneur today. Yeah, so I agree. There's a lot of work, and now we're getting into like the real work begins. So you get the offer, you submit offers, it gets accepted, then you work really hard to get the deal closed, and then you close in the deal, and that's where a lot of when I say like the real work begins. When you close on a property, then you have to execute on the business plan.
Yeah.
And then you operate it. How long do you typically hold your deals for?
Lately, they've been around 3 years, but I see that maybe adding on a couple more years to that for deals that we're holding now, just because of how the market is. Because before it was something that, we were buying these, if we bought any deals, beginning of COVID or before COVID, I mean, obviously you didn't really have to be, the best real estate investor ever to make money. You know what I mean? It was pretty straightforward. You didn't have to even finish out your business plans. You know what I mean? You could finish out part of them. And usually what we'll do is our goal is really to get them to like 75, 80% finished and then sell them. You know what I mean? So there's like meat left in the bone for the next value added investor. And you have a proven track record, maybe even less than that. You know what I mean? Maybe 50, 60%. But the thing though is that those went even less than that when you're going through COVID and somebody's coming to you paying some price and you're like, this is crazy. You know what I mean? And I remember I had one investor that was like, no, 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 don't sell it. And, the beginning of 2022, he's happy we sold that property. So,
Oh yeah, that was a very wise decision to sell at the beginning of 2022. Yeah.
so it's taking that money off the table and knowing too that it's not just your money. I mean, it's your investors' money too. And hey, we've reached where we were going, even if we didn't finish out the business plan. You know what I mean? Let's sell it. You know what I mean? And take some money off the table. And then you guys can now, put this into different deals or another deal with us when we find it, whatever it might be. And that's a different conversation too, because you don't want to, everybody wants to sell at the top, but I mean, it's really something where, working through, and we could have worked out, we could still have the property and working through the business plan, but it might be 2 or 3 more years until we got that price again. You know what I mean? And so it's important really to keep it, when brokers reach out to you, kind of see what they have. They have a buyer there, you know what I mean? Speak to them and see exactly what they're offering, you know what I mean? And who knows, you might sell it. So it's something that that's an important part of it too, of kind of knowing what your goal is, and then also knowing what your debt is, you know what I mean? Because on those last 2 deals that I'm talking about there, I think we had like 10-year debt on that fixed. So there was no rush for us getting out of those deals, you know what I mean? Which adds a whole nother level to the conversation because, hey, there's no, you can't lowball me on this because I don't have to sell it. You know what I mean? It's a different situation for like, hey, your debt's maturing, you know what I mean? You got to refinance this or sell, the balloon's coming, or rate cap's expiring, which is no one wants to hear. So these are things where, you have to really make some hard decisions compared to someone doesn't have that. You know what I mean? So it's another thing of knowing, like you said before, partnering with the bank, to as them being the largest investor. It's true, but it's also someone too, you have to be very careful and kind of how you've situated that debt and how you've set that up and make sure it fits with your business plan, but also gives you some room for stuff not going 100%, right?
Hmm. Yeah, yeah. As you mentioned, the last 2.5 years, lots and lots of deals were purchased using variable rate debt, and it became very, very, very challenging. They're short-term loans, and so a lot of people, their backs up against the wall, and it's been very challenging. Well, Charles, I appreciate you walking us through that journey, if you will. I think I called it the investor journey, but your general partner journey, if you will. Like how do you go from I want to do this to now you're in a deal, and there's a lot to it. I think you did a good job of simplifying that and explaining how that process works. What's next for you and your business and your growth?
So we are, I mean, we're pretty selective when we buy properties. We haven't purchased a property since the end of 2022. So we are extremely selective when we buy properties. And we've been, I don't want to say sidelines, but we've been, there has been much deal flow. So really being picky in deals where we're looking at and reviewing. And that's one of the benefits of being a smaller company, syndicator, is because you can we don't have an acquisition fee machine that we have to like keep considerably, just keep on feeding, you know what I mean, with
Hmm.
deals,
Hmm.
no matter if they're good or bad. And that's one thing that I found out when I've passively invested. Some of the best deals I've passively invested in are with small syndicators that like you don't hear from them for 6 months and they send you a deal. Then you don't hear from them for a year and they send you another deal. And you're like, oh, wow, these are like, you know what I mean? Because they spent
Hmm.
the time, they don't have huge payrolls. And so that's kind of how we've modeled our company on doing that. And looking at buying more properties, we really focus on three main markets now in the United States. Mainly in Central Florida, and then Greater Atlanta, where we have a deal there, and DFW, where we have another deal there, and Dallas Fort Worth. And those are the three places that we have. And we work, if we're not boots on the ground there, we have a operating partner that we partner with in those markets for many years. And yeah, that's kind of how what we see coming up in the future is starting to buy some deals in 2025 again. We have a lot of investors eager to get back out there and invest, and finding deals that pencil and making sure, our big thing is that, making sure there's enough, these are really fat deals. You know what I mean? Every time that you try to like sharpen your pencil and stuff, that just gets me a little uneasy. So it's something that you got to really see those large increases in rents that you can make and where you can add some operational efficiencies.
So with that, do you feel that you said 2025. Of course, it'd be hard to close a deal between now and the end of the year. It's possible, it's plausible. But do you feel we're at or near the bottom of the market in the cycle we're currently in?
I don't think all the distress has come through. And so just a recap of people from 2022, you mentioned before interest rates going up 2.5 years ago, and that's correct. And typically how people finance with the floating rate debt is they had 2-year interest rate caps. So interest rates started going up, I don't know, April or something like this of 2022. They really shot up in like the summer, quarter two, three, something like this. Four of 2022. And so we're kind of rounding out that 2 years. And what I've seen is that for a number of operators I've spoken to that have debts and issues with their debt, or floating rate debt that they've had issues with, is that they've been able to work out with their lenders, right? Now, there's different ways they can work it out. They can tack the interest onto the end. They can say, we're just going to, renew this and just keep it going as it is if you pay the interest or whatever it might be, whatever kind of scenario it is. So I don't think not every one of those deals is going to work out. So I think there's still going to be um, some deals coming up. But what I've seen is the lower quality deals are the ones that get foreclosed on. You know what I mean? Better quality deals, I typically will see that you get workouts with because it's a different story if you have a poor quality asset built in like the early 60s or something versus something else built in the 90s. You know what I mean? That is in a better area. There's going to be a different conversation with that lender because there's going to be more time, whereas the older property is probably going to have more deferred maintenance. If they have issues paying debt, they're probably not doing a lot of maintenance on the property, and that's just like the beginning of the end. You know what I mean? So it's I
So
think
you don't think
that's
all of those distressed deals have come to market yet?
No, in one fashion or another, I don't. We have another thing as multifamily that, you said a lot easier than I did, but I think in 2025, we're going to have, this is the last year of a lot of new inventory, which is slowing down by, I think, like 100,000 units next year, and then slowing down considerably in like 2026. So I think that's all playing into any multifamily investors now that own property, and that's going to help raise rents, raise prices, all that kind of stuff going forward. And so it's multifamily. I mean, everything goes in cycles with it, but it's also something that I see, 2008 type stuff? No. But do I think we're at the end? I don't think all these loans that are underwater have come through yet. You know what I mean? But I think with this, that's going to help with as all those new deliveries, all the concessions and stuff that people get for free with them burns off, we're going to get back to a more normal market. And you'll have someone that's like, oh yeah, I will rent your property built in the 90s instead of this one built in 2024 because I'm saving $500 a month. You know what I mean? So
Gotcha. Well, Charles, I really appreciate your time and all of the knowledge that you shared with me today. Very, very, very valuable. If someone wants to get a hold of you, what's the best way for them to do that?
Yeah, so our company is Harborside Partners. So if you go to harborsidepartners.com, YouTube channel there, we have a ton of information. We have a podcast, everything like that. That's really the place to go. If you're interested in passive investing, we have a free passive investing guide there. And then feel free if you're interested in investing at all, fill out our form there and get on the phone with myself or one of my partners. And, we can talk about you passively investing or becoming an active investor.
Awesome. Charles, I really appreciate it. Have a great day. Thanks for tuning in to the Stephen Lee Thomas Show today. And if you found value in today's episode, then I have a favor to ask you. Please share it with friends, family, and anyone who might benefit from the insights we shared today. Also, don't forget to subscribe and leave a review if you enjoyed the show. And if you aren't already part of our school community, then head on over to school.com/multifamily mastery hub and join today. And again, thanks for tuning in, and I look forward to connecting with you in our school community.